Reliance Industries is one of the biggest companies in India and it is all set to release its Q1 results soon. Here's a look at the RIL Q1 Preview to understand what you can expect as an investor. I'm Neha Vashisht from ET Markets. Let's start. RIL is expected to see a double-digit fall in profit for the June quarter due to sluggish performance of the oil to chemical business. As per average of estimates given by 10 brokerages, RIL's consolidated net profit for the quarter is likely to drop 10% year-on-year to 16,170 crore rupees. Consolidated revenue is seen down 2% YOY at 2.15 lakh crore rupees. Sequentially, the fall in the bottom line is expected to be steeper at over 16%, while sales are seen rising by a mere 1%. Reliance Industries will release its earnings for the first quarter on Friday, July 21st. Let's see what analysts are expecting when it comes to RIL Q1 results. On number 1, we have Nuvama Institutional Equities. Nuvama anticipates a 1% YOY dip in RIL EBITDA, which is negative 3% QOQ, largely led by weak O2C, partially offset by strong oil and gas, retail and telecom. Nuvama expects RIL oil and gas operations EBITDA to rise 41% YOY, flat QOQ on higher deep water gas prices. It also expects O2C EBITDA to decline 24% YOY and 7% QOQ on a subdued refining and petchem segment. Singapore GRMs have plunged 70% YOY and 30% QOQ on weaker demand. Petchem demand also remained relatively weaker during the quarter, offset by falling ethane prices. Retail EBITDA is likely to remain strong, up 24% YOY and 2% QOQ on higher footfalls. Lastly, RGO's EBITDA is likely to surge 11% YOY, flat QOQ on a high subscriber base, which is up 6% YOY, 2% QOQ. ARPU shall likely remain flat YOY and QOQ in Q1 FY24 at 171 rupees. On number 2, we have Motilal Oswal Securities. Motilal expects consolidated EBITDA at 386 billion rupees, up 2% YOY, flat QOQ. EBITDA at 184 billion rupees, down 17% YOY, up 2% QOQ for the O2C segment. Production meant for sale could be at 17 MMT, which is up 4% QOQ. Expect EBITDA MT at $101.1, which is flat QOQ. Further clarity on 750 billion rupees announcement in the new energy business, growth in retail store additions and any pricing action in telecom are key monitorables. On number 3, we have BofA Securities. BofA Securities estimates a 10% YOY drop in PAT to 16,160 crore rupees and a 16% fall from March quarter. Consolidated revenue may decline 7% YOY and 4% sequentially to 2.08 lakh crore rupees. BofA estimates O2C EBIT to be down 6% QOQ, mainly on the back of weaker GRMs in the refinery business, offsetting benefits from cheaper Russian crude oil. Petchem EBIT is largely expected to be flat sequentially. Oil and gas business operating profit expected to be largely stable with 1.6% sequential increase in revenue. RGO expected to report strong net additions of 7 million in subscribers and largely flat average revenue per user, leading to overall revenue growth of 1.6% sequentially. Retail business is expected to report double-digit growth of 22% due to steady momentum in the business. And lastly, on number 4, we have Kotak Equities. Kotak expects RIL's standalone EBITDA to decline 14% QOQ on weaker GRM, flat petchem margins but partly offset from marginally higher E&P profitability. Consolidated EBITDA to decline by modest 2% QOQ due to fuel over recoveries in O2C and QOQ improvements in RGO and retail. EBITDA for RGO to increase 3% QOQ, blended ARPU improving to 181 rupees on subscriber mix improvement, rising FTTH contribution and QOQ higher days in Q1. For retail, EBITDA is likely to increase by 3% QOQ, driven by increased store footprint and benefits of operating leverage. Well, that is all for today. Stay tuned to ET Markets for more.